Hi, welcome to Outlier Live. So IPOs, it was year 2022. I was sitting with a group of business owners. We were discussing about SPACs. We were discussing about IPOs. There was this common concern then. Uh, SPACs were going belly up. IPOs, we weren't seeing many interesting companies going public that year. So there was this concern that okay, if IPOs will be back again, right? And looks like it's year 2023, and I am seeing a lot of interesting companies going public. So let's talk about IPOs today. So US is has always been a hotspot for companies to list themselves, go public, raise money, just because US stock market is one of the biggest stock market all around the world. So there is no doubt that a lot of companies, not just from United States, of course, there are a lot of companies from other part of the world. They prefer US stock market to list their companies to raise money. Right now what I am seeing, a recent trend that a lot of Southeast Asian companies are trying to list on US stock exchange. You have seen there has been some geopolitical change. There were a lot of Chinese companies, they were listing on US stock exchange, but most recently there has been a pause in a lot of Chinese companies going public on US stock exchange. So that gap is being filled by some of the other companies from countries like Indonesia, Singapore, and few other places, few other countries. So what I was looking at, there were some recent announcement by this Vietnamese internet company, VNG Corporation, and Philippines real estate company, US stock exchange. And I'm also seeing some announcements from Singapore based companies, a Thai insurance technology company. They are discussing about their plans. They may list on US stock exchange, so we will know. So again, looks like a lot of IPOs happening in 2023. And I was looking at the calendar. So Instacart is going uh, uh, public. I think probably it went public, I think yesterday. Um, we saw ARM Holdings uh, went IPO uh, last week. So we'll talk about ARM in a second. But if you look at 2023, I'm seeing there are a lot of companies. Turo, probably you know about this car uh, renting app where you can, rent a car from some other people like who owns these cars. Clavio, a company around email marketing and all that. So there are a lot of companies that are going public this year. I mean, 2023 is becoming one of those years when IPOs are coming back again. So, which is very, very interesting. And I have always been fascinated by IPOs. But what I have personally found that, uh, you know, uh, after looking at many IPOs, that you should be very, very careful about IPOs. There is a chance that 4 out of 5 IPOs you may not make money in those. And this is not me just talking about it. This is one of the research studies that has been done in Wharton School. So this guy, Jeremy, he actually looked at around 9,000 stocks that went public since 1968. So the study assumed that each stock was bought at either the offer price or at the end of the first month of trading and was held until the end of 2003. So these are the findings. So the finding may shock you as IPOs were found to underperform the market by an average of 2 to 3%. So which is very true. This is a very very common phenomenon. Like, people get excited about IPOs, but really how the company will perform, how the market will react, how investors will react to that company, it's really when they go public, they actually start disclosing, their financials. They start disclosing about, other changes within the company, their approach, how they are selling, things like that. They start talking about risk. It's then they will see the real performance of that company. So I have seen that a lot of companies, if you are like, okay, yeah, this is a great company, I want to buy in, right, when it goes live. Most of the time, when you buy on that first day or within first month, right, you may not be buying at the a good price. It may be already overvalued, right? Because all of the investors who have invested before, like, they are just waiting to liquidate, they are waiting to make money. So you may be buying off of them, and there is a very high probability, it's not just me, it's the data which says that the stock may drop, right? And what happens is that you panic. Like, as an individual investor, what happens is, when things don't go your way, you tend to overreact. And sometime reacting, it's not bad, because if the company is not doing good, cutting the losses is always a good idea. But if the company is good, so the companies like, for example, Meta, right, Facebook, great company in terms of performance, right? And few other companies are there which have done phenomenal from the day they went public. So I would say there are certain companies, there are few companies that are great. You need to know, what they are doing, what line of business they are in, whether this business is going to skyrocket, whether this business is going to stay relevant, right? For example, I talked about Instacart in my last live video. I personally think that uh, grocery delivery business, it's a very high risky business. Why? uh, there are a lot of companies which are going to pose as threat to Instacart. For example, Amazon, Walmart. Walmart is very big in groceries. So I feel like, when Instacart, you may see the drop in Instacart stock price when they go live, when they go IPO. And I think that is the similar trend I am seeing in some of the other companies. For example, Redfin, it went public in year 2017, right? I knew a lot of real estate professionals at that point of time. I was, involved in some of these things. And I was talking to some of the investors who were very very excited about Redfin, because they knew personally a lot of agents working for Redfin. They had, big ideas that, hey, Redfin is gonna just skyrocket, and it's gonna keep going up and up and up, because this thing is like, they literally control the market, they have a lot of agents and all that. But if you see that over period of years, it has not performed good. So this is just one example I'm picking up. Yes, there are companies which have done great. So there are a lot of mixed examples, but overall, if there is one successful company, one successful IPO, you may see there are like four unsuccessful IPO. So you need to be very, very careful with the due diligence, like, where you are investing. At least that's what I would personally do, is I'll just wait for a few years for actually company to see where the price is gonna be, how the performance in last 3, 4, 5 years, and then probably consider that, to invest in. Because in the end, my goal is, to invest money, not to get excited about, a certain company, and, oh yeah, I want to just throw money in it, even though if I'm losing money, I don't want to do that. So that's just me personally. um right, so it went public few days ago, last week, right? The stock dropped, and there was lot of excitement. It was oversubscribed oversubscribed, and everybody was so excited about it. And I don't know what will happen again. This is just few days, a week in, and really you can't measure stock performance in just a week. But what I'm saying is that this is a very very common phenomenon. In when a company go public, there is a very very high probability that stock may drop. There may be some correction that's happening. For example, this analyst, they just uh, uh, added the price target of $46 for ARM at underperform. So I will be very very careful with ARM, because what they are seeing is that it will take some years for ARM to really prove themselves. So they have certain goals that, hey, we want we want the customers to move from their V8 to V9 architecture in next few years, right? But this analyst think that they may not be able to reach the target. So the guidance is closer to 5%. This analyst think that they uh, may be able to reach around 4% of that goal. So now overall, there is, if you look at ARM again, there are some other risk factors. You have to consider China is one of the biggest, in my opinion, because revenues from last year, like it's there are like almost 25% of revenues are coming from China. And based on how things shape up in coming months with China, there is a risk involved here. So you need to be very very careful when you consider these IPOs. And this is just again one example. Things change, macro events change, the economic outlook change, everything changes. And in many cases, when these companies go live, they have to prove themselves. So during that period there is a lot of uncertainty. And as a retail investor, we all need to be very very careful when we consider investing in IPOs. But there are again great companies which probably you want to hold for a long period of time. So thank you for watching today. I'll see you on Thursday.